we'll have like a quick walkthrough of like what this PPT says. So like I said, you need to change your perspective towards market. Once you know like how to see things differently, you will be achieving things in a much better way. Okay, so we are going to discuss something, pi. So what is pi? It is the mathematical constant, 3.14, as most of them know. And next is ORT. Then it's my personal favorite, time cycle. And finally, the most important thing with respect to traders, whether you are a beginner or an experienced one, trading psychology and risk management. Okay, so we'll begin with. So everybody know about the mathematical constant pi. The value is 3.14. The interesting thing with respect to pi is, so it is an universal constant, and it holds true with respect to a lot of reasons, because like circles, they are universal, and it's like a fundamental and so how is pi defined? So pi is defined as a circumference of the circle and diameter of the circle. So we say circumference as 2 pi r and diameter as 2r. So once both are cancelled, we get the pi, the constant. So we'll see like how this universal constant holds good with respect to pi. These are the stories with respect to pi. So like how it came and like the significance. So this is the interesting one. Okay. So if you just see, these are the Fibonacci numbers, and pi, it even existed before the Big Bang, and it is permanent and unchanging. So now we'll enough of the theory and the boring part. We'll see like how practically we could make use of pi. So I'll just share a simple strategy which you could learn in less than 5 minutes. So the idea is, so once the idea is, once you know how to look a market in this perspective, things will be very much different. Let us see. I'll take this example. So how to calculate the pi? You pick any stock. Okay, just pick any stock. You can take even Nifty, Bank Nifty. Just take the previous month close. Okay, so now today is December. In fact, with respect to today's close, you are supposed to do the calculation for next month. So now we have taken this November data. So November, the close was 1527. Okay, so this is the close. Now, what we are going to do? So we know pi, the value is 3.14. There is an Excel with respect to this particular method. You can just download our app, and you could download the Excel for free. I'll share the details little later. So I'll just explain the mathematical part and the mathematical beauty with respect to trading. Okay, so you just take this close and you just divide it by 10 pi. So why we need to use 10 pi? So that is the constant factor which fits in well with respect to the stocks. Okay, so once we divide this 1.27 with 10 pi, that is nothing but 31.4. You have this particular value 48. Okay, so once you have this pi constant, you add it to the closing value. So here we have the number 1575, which is derived by adding the pi constant to the close. Likewise, you subtract the pi constant from the close, and you have this particular number. So this is going to act as resistance 1, and this is going to act as support 1. Fine. So This is how you are going to use this particular method. Now, so what happened with respect to this particular stock? So it was falling down, and the moment it reached 1478, it started to reverse. And what happened? Multiple times, the number was respected, and it gave like 50 plus points profit. And usually we used to place stop loss of 1%, which means the stop loss is like 14 points. And for 14-point risk, you would have got 50 plus points based on this particular trade. So this is totally based on pi by 1, right? So we do have like the version 2 or like the by 2. So all those things you will learn in detail. But again, you need to know the overall view, like how simple constants are dictating the market. Just see the beauty here. So again, a November month close. When I say like November month close, you have to take a last calendar day. Okay, not expiry day. You have to just take a last calendar day close, and once we have this close, just again take the close divided by 10 pi. You have this pi constant 58.9. You add the pi constant to the pi. You have this particular number, and again you subtract the pi constant from the close. You have this number, so this is going to act as pi support, and this is going to act as pi resistance. And if you just see, these numbers are decided on November 30 itself, or whatever the last working day or trading day. So that time itself it is decided. And what is happening? Just see, like multiple days, the particular number is being getting rejected. Now, basically, any price action guy, they would be saying because of the price action or because of the selling zone, this particular stock fell down. But how come this particular number was chosen as a selling zone? It's because of pi. So again, it is a leading indicator. So what is a leading indicator? So we do have like two kinds of indicator. One is leading and the other is lagging. So what are the prime difference between leading and lagging? See, the normal typical indicators which most people use, it is the lagging indicator like moving averages, super trend, around. So those kind of indicators. Why? See, after a particular thing has been done, they say sell. For example, Nifty will be moving up like this. Okay, so it has come like this. Then it will be saying sell is somewhere around here. But what is leading indicator? When Nifty is moving like this, it will be saying sell here. So it will be giving us the number or direction well in advance. So that is called the leading indicator. So always pay attention to the leading indicator. So this is one simple secret of success in trading. As long as you are following the leading indicators, you should be fine. Now, what happened? So this particular stock from 1908, it cracked by 300 points in the same month. So imagine like if in case you are an option buyer and you would have bought some option for 3K or 4K here, your amount would have doubled, tripled or multifold, it would have raised, right? So just give again importance to the mathematical methods. Now this is the next one, Tech Mahindra. So the close was 1077. The pi constant was 34. Once you add both these things, you have 11111. And from 1111, it started to fall. It corrected by 100 points or like 10% correction was done. If in case you are an F&O player, there was profit of 70.8K on this particular trade alone, right? And stop loss is just 11 points. So for the risk of 11 points, you would have got like 100 points, and the risk reward ratio is 1:10 over here. Tell another example. So here 832. So this is October data. So October closes 832. So this is for November. So what happened? November 22, it got triggered or activated, which means you need to wait patiently for 21 days for this particular entry. So this kind of patience is what a winning attribute or quality of a trader. Okay, always be a hunter, don't get hunted. And so 832 plus pi constant 26 is 858. So from 858, it cracked by 20 points, and again from the number it started to reduce. So this is about pi. It's like how to use a mathematical constant and do trades. Of course, we could do the same thing in Nifty, Bank Nifty as well. Now we'll move on to the next mathematical method, option reversal trick. So we already have made a YouTube video like how to make use of this particular method. You could check in our YouTube harmonic traders. So what we need basically, we need to just find the weekly close and we need to find the OTM, ITM, CEP. Once you just feed in this Excel, you will be getting the numbers, and so we shall buy somewhere around here and we can sell here. Even the stop loss will be having along with the targets. Okay, so what this method has done, so this happened this particular week. From 1868, Nifty cracked by 80 points, and again like 90 plus points, so more than 180 points correction happened because of this particular ORT number. And see, this is the beauty of ORT, so one of my very favorite method. So we shared this years before, and we are maintaining track of this in the last 1 or 3 episodes, which means the last 2-year records we do have. So this is the recent summary of ORT. So you can just see like how many swing points it is, or like direct points it is giving with respect to Nifty. Right, so for 29K profits, single lot profits are being done based on the simple mathematical method. So how much time you need to learn this method? Just 5 minutes. So you could check in our website about the past performance of ORT. And now many people would have been bombarded by the recent up move with respect to Bank Nifty, followed by Nifty. So 1 week before it was looking like hell breakout, and both index were cracking like anything. But very recently, Bank Nifty formed a bottom, and from there it started to reverse. If you just want to know the reason, it is nothing but our monthly ORT buy. So this ORT you can do it on weekly for stock and index. For index on weekly, and monthly you can do for index and stock based on the available expiry. Okay. Yes, you could even apply this in Fin Nifty as well. So these numbers we derived 1 month in advance. Just see the beauty. So 1 month before we posted this in our YouTube. So from 41,536, it came closer to that 41,570. It went up by almost 2,000 points. So if in case you are an option buyer, if you have bought any CE here, again your amount would have double, tripled, right? Always have too much patience whenever you just go for the entry. Now we want to just discuss about one of my favorite topic, date. Date, time, the cycles are my favorite topics. We'll just show some very simple methods or examples which you could even learn right now, and you could start applying maybe after the session is done or maybe after half an hour. We will show the most simplest time cycle or the methods where we can trade based on date. Now take this particular date, 1206, right? So just ignore the year part. So we have the date at 1206. Now we have 4 different numbers, right? You could write or you could rearrange these numbers in any format, right? You can have as 1602, 1062, 2610, and like this. So 4 into 3, you could have like more than 12 plus different combination of numbers. So whenever stock is falling and approaching these numbers, one could try to go for buy. So here what happened on this particular day, this particular number 2610 came and it started to move up. So this particular stock gave 130 points in 3 or 4 days, and the stop loss was not even hit. I'll show another example so that it will be very much clear for you. Now take this particular stock Grasim. See this particular date 1208, right? So the next particular day it made a high. So from bottom it went up towards the high of 1820, our selling value, and from there it started to fall. So here close to 40 points, and here again close to 80 plus points. Okay, I'll explain ORT after I'm done with this particular date logic. Just hang on a moment, friends. So I believe you guys should be clear with the date logic part. So you pick the date. So for example, okay, so the next trading day is going to be second, right? 0201. So this is going to be the next trading day. Now, based on these numbers, just look for some stock. If in case, let us say there is a stock which closed somewhere around 1030, and if in case it is approaching 1002, yes, we can try to go for buy, right? Or let us say like so this is our number. How this number was derived? From these numbers, right? Or let us say there is a stock which closed at 960. If in case it approaches 1002, go for sell. So if in case it closed here and it is coming down, go for buy. So we are 100% reversal players. So what does reversal player mean? A reversal player is nothing but, so whenever stock is moving up, we try to go for short. Whenever stock or index is coming down, we try to go for long. Okay, so why reversal is good? The risk reward ratio is extremely high when you are doing reversal trading and when you know how to make use of TSL. Kotak Bank, so from 1902, so the date was 1209, 1902. It made a decent high, and from there it cracked by 105 points. So as long the particular date's high is not taken out, we could assume the particular stock is bearish, and we could just try to go for sell on other valid systems or setups. So with respect to ORT Pi method, you could download our app. So we have shared the Excel. So just search for Harmonic Traders. So you could get all the details. You could download our app and get these Excels. Okay. So with respect to ORT, so we have some more topics. So let me just go through, because this particular video is already available in YouTube. So we have in multiple languages as well. So you can just check in our YouTube to learn about this ORT in very simple term. Take Friday close. Okay, take a Friday close of every week, and with respect to this close, just pick the out of money CE, in the money CE, out of money PE, in the money PE. Just pick the 4 strikes and feed all these values. So these are of the Friday closing value. Once you just feed in all these values, okay, once you feed in all these values, this Excel will be giving all the numbers, what are the buy sell numbers, and you could make use of it. So this Excel you could download from our app. Now this is my most favorite topic, time cycle. Once you know the power of time cycle, or you witness what is a time cycle, I bet most of you guys would be abruptly stopping your current trading system, and you would be very much fascinated, and you'd be digging more time with respect to time cycle. So what is time cycle basically? See, based on all the legendary traders, future is nothing but, okay, it is some projection of past. Okay, so based on past or past events or past price patterns, the future events are happening. That is the universal truth. Okay, now we all know, like and let us take an index or stock. It moves like this, comes down like this, moves like this, comes down like this, moves like this, right? So there will always be some relationship between the major highs and lows. What is going to determine that is the time cycle. So in time cycle we have 2 parameters. One is the major time cycle. So this is for pure positional ones, and another is minor. So this is for intra or swing. We'll see some example for both the time cycle. So now let us take this particular example. HCL Tech, see, on March 19, 2020, it made low of 375. Okay, so this particular low was 375. So exactly after 375 trading days. Okay, so in time cycle we can consider both the trading days and calendar days. So exactly after 375 day trading days, it formed the 52-week high. Okay, so 1377. So this came exactly after 375 bars, and from there the correction happened. So this is how the actual time cycle is, and it works. So all you need is a simple date, a price, and once you know how to connect the dots, just imagine, once you know, like, this is the 52-week high, and we'll wait for one or two candlesticks to confirm. Let us say here, the top is done. Imagine if you have shorted and or if you have bought a put somewhere around 1300, it gave like 400 points, right? So once you know the major trend and once you play in option, the risk reward ratio is humongous. Now about minor time cycle. See, just extending the same example so that it will be clear for you. So we know from 375, it made high after 375 trading days, and the particular high was 1377, right? So this particular high 1377, of course, to wait for 1377 days, it is going to take a while because it happened only in 2021. So it is like more than 4 to like 5 years, right? Now, what we do, we can calculate the minor time cycle by converting the price 1377 as hours. Once you put this as hours, you have this 57 days. So what does this mean? Means from the 52-week high, after 57 days, we could expect a minor trend change. When I say like trend change, so we know the top is done based on the major time cycle 375. From 375, after 375 days, the top is done, right? So from here it is falling, and if you just see exactly after 57 days, the bottom was done, and from here it went up by 270 points. So this is the beauty of time cycle. Based on very simple mathematics, you don't need any Excel, you don't want to do any complicated calculation. Just based on simple numbers, you can try find the major highs and lows. And once you know the major trend, and then you start trading. Don't trade like you want to trade. Just always look for patterns, look for confirmation. Once you have everything set, then you can initiate your trades. So this is the beauty of time cycle, and this is of course applicable in all places, equity, commodity. Other than crypto, you could apply anything, whatever I teach in all the places. Equity, stock, commodity in all the places other than crypto, because in general, crypto no technicals work, and until our government supports the actual crypto, we will not be like supporting or promoting crypto. We will be sticking with whatever the government says and the norms are. So Nifty on 2901, it made a low of 13,596. So once you convert this particular hour into days, you have 567 days. And exactly after from this low, exactly after 567 days, it formed like a major swing high. And from here, it corrected by 1,200 points. So this is again like minor time cycle, since we are using hours instead of days. Okay. So like I said, time cycle is a very lengthy, vast, humongous topic. So we just want to pick you the most simplest and easiest example so that you will get an idea, and you will be trying to backtest anything, or like even try to build your own strategies based on this and get benefited. So this is the gift which we want to share with our beloved followers. Trading psychology. So always this plays an important role with respect to success or failure. Honestly, more than technicals, like how you handle the losses, it is very, very important. And of course, this comes only with the time. When I say like time, just ensure you don't lose too much in that particular period of time, because like statistics again says 30 to 50% of traders are gone permanently within the first 1 year. Means they think it as like it's a kind of business or something where they could easily make money. They come in, but unfortunately it is not the real one. You need to have good amount of knowledge. You need to have a lot of things with respect to time decay, and once you know how to handle those things, yes, you would be able to make good amount of money. So we'll take some 5 minutes, and we'll just discuss about the psychology part, and we'll come back. If in case any queries are there, I'll take it up at the last. So always remember, fear and greed are mostly associated with this trading psychology. And once you have like a leading indicator or like a rule-based system, you could eliminate the fear. How? You know what is the risk before you are entering into the trade, right? Let us say like your capital is 1 lakh. Ideally, the risk amount per trade is 3K at the max. If in case your capital is 50K, you are not supposed to risk more than 1.5K in a single day or a single trade. So this is the basic finance which you are supposed to follow. In fact, I'm a financial advisor as well. So these are the golden financial rules. So don't violate this. So with respect to your capital, don't lose more than 3% in a day. Okay. So basically, with respect to this psychology, we can put it in this simple word. There are always like 4 outcome of a trade. First one, big profit, which everybody wants. Next one, small profit, it is kind of okay. Third is small loss, and fourth is big loss. We always want this, but most of us always end only in this, right? Why? So whenever profit comes, we book like 2K, 3K profit, but whenever losses come, we will be holding till 10K, 20K or more, right? So don't have this. So the first thumb rule with respect to all my beloveds, eliminate this 4. Okay, don't trade with big loss. How to eliminate this 4? Of course, we'll be sharing a lot in the upcoming sessions. In very simple term, place small stop loss. Whenever you take a trade, just place small stop loss. Whenever you are carry forwarding, just do in options or do with hedge. Just ensure your SL is small and fixed. So with respect to risk management, just ensure you have a diversified portfolio. If in case you are an investor, don't put all these stocks in a single sector, because even the sectors have a particular time cycle, which means a sector will be bullish for a number of years and then it will be bearish. If in case, unfortunately, you invested at the peak, okay, and maybe after 1 year, after you have invested, it is going into bear mode, you will be in big losses. But if in case your portfolio is diversified, majorly at least 1 or 2 portfolios should be in green, so that overall it looks decent. So don't put all the eggs in single basket. And one common mistake which most of the traders do is they always want their trades to go in their direction. Of course, that is good. Positivity is good, but don't have too much hope or don't fail to manage the risk. Honestly, prayers are good, but prayers will not be helping all the time with respect to trading. So let us say like you have taken a CE, okay, you have taken 10 lots CE in Nifty, based on technicals, whatever it is, everything is pakka. That particular night, some war news came or some negative news came, and next day market is opening by 200 points. Okay, so don't do these kind of things. Whenever like you are taking bulk lot, just ensure the risks are managed. So the simple stuff with respect to the risk management. Before entering into the trade, determine how much risk you are going to take. Like I said, for 1 lakh capital, the max risk one can take is 3K. Okay. So likewise, if in case your capital is so, you just manage your risk accordingly. After taking the trade, don't think about closing it after the loss of 5,000 comes or 10,000 comes. Before taking the trade, just ensure how much risk you are going to take. And always have a decent stop loss and put the stop loss into the system. Okay. So have a diversified portfolio. If you are a long-term investor or an investor, don't put all the eggs in single basket. And if you are an investor, you can always add index Bs. So whatever happens, India would be growing with respect to long-term. So of course, we could see Nifty touching 50K in coming decades. We don't know which year, 2030 or 2040. Or before that or after that, but overall stock market is like a baby. It keeps growing. Besides the multiple correction coming, if you just see, it keeps on growing one-sided overall. Of course, there was COVID crash where from 12,400 it halved even, like, so it came closer to 7,500. But again, from here it has gone to 18K, right? So overall it will be going up. So try to be a long-term investor, and of course, even in investment, do have your own SL, and always have a profitable risk-reward ratio. Just at least ensure you have a risk-reward ratio of 1:1. Okay, so don't have a poor risk-reward ratio. That is very, very significant one, especially with respect to the new traders. So the final piece of advice: so always have small stop loss in the system. Okay, and whenever you are carry forwarding, okay, so I always say, as long it is intra, you are the king, you are the boss. Why? You can place the SL in the system and you can manage the risk. But when you carry forward, the particular index or the stock becomes king. We can't have control outside the marketers, right? We don't know what is going to happen, right? So whenever you carry forward, just ensure it is hedged or you do take spreads. And whenever you're doing intraday, always have a habit of trailing stop loss. So what is trailing stop loss? Let us say you are taking a trade with 3,000 rupee risk, and this particular trade has given like say 2k profit. Okay, now you move your SL from a minus 3,000 to plus 1,000. If your trade gives 3k profit, if you want, you can book, or you can revise this 1k profit to 2.5 or like 2k profit. So this is how you can do and enhance the profit. Okay, so just try to follow these rules. They are very much needed with respect to market if you want to survive for a long term. And everybody could make good amount of money in trading and investment, provided you are very much disciplined and you follow the rules all the time. So these are some of my favorite books. So if you're an investor or you are a trader, you could read these books and get benefited.